Pressure mounts economic data has made rate cut hopes harder to defend as inflation stays sticky while growth slows. That mix is uncomfortable for risk assets because central banks get less room to ease just as the economy loses momentum. The confirmed event is that PCE was cited at 3.5%, core PCE at 3.2%, and GDP growth at 2%, creating a difficult policy mix. The reason this belongs in a crypto news read is that rates shape liquidity, dollar strength, valuations, and speculative appetite across equities, crypto, commodities, and credit. The opening pressure point is rate cut hopes face sticky data against inflation pressure with slower growth. The first confirmed detail is PCE is cited at 3.5%, and the immediate reason to care is that core PCE is cited at 3.2%. That means the viewer should track next PCE and Fed language, instead of treating the first reaction as the whole story. The verified frame is narrow and useful. The confirmed baseline is persistent inflation pressure alongside slower GDP growth. The evidence also highlights political pressure around the Federal Reserve and speculation about future leadership. This gives the viewer the factual floor before any larger conclusion is drawn. The two facts that set the baseline are clear. GDP growth is cited at 2%, and the mix complicates rate cut timing. That frame keeps PCE and core PCE stay elevated connected to the actual consequence, rather than floating as an isolated statistic. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. For pressure mounts economic, the mechanism is the part that decides whether the story has staying power. The mechanism is the stagflation risk tradeoff. Cutting too soon can reignite inflation, while staying tight can pressure growth. Oil volatility and geopolitical risk can complicate the path by pushing energy prices and inflation expectations higher. That is why the process behind the event matters as much as the event itself. In practice, policy has less room to ease is the hinge between the confirmed event and the next market or user response. The mechanism split is simple. Sticky prices limit easing room, while slow growth raises recession concern. If that hinge fails, the strongest tidal-level claim loses force even if the story keeps attracting attention. The impact lands on a specific group rather than the whole market at once. Rate-sensitive investors, crypto traders, bond markets, equity indexes, households, and central banks are affected. The practical consequence is tighter financial conditions for longer, which can pressure high-risk assets. If rate cuts get delayed, leverage and speculative positioning become more vulnerable. The useful boundary is that risk assets face tighter liquidity, while cooling inflation is not proven. The impact split is crypto can feel tighter liquidity and high-risk assets depend on rate expectations. That keeps the impact focused on the people, markets, or systems actually named in the evidence. The unresolved part needs to stay visible. What remains unclear is whether inflation cools fast enough for central banks to restart easing expectations. That does not prove that one data set proves rates must rise again. The cleaner confirmation would be new inflation prints, labor data, oil prices, and central bank communication would clarify the next move. This is the line between analysis and speculation. The unresolved split is one data set does not force a hike and more inflation and labor data are needed. The story can stay important while cooling inflation is not proven remains unresolved, but the stronger claim needs visible proof. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal is not vague. Watch the next PCE data, oil reaction, and Fed communication on whether cuts remain possible. If inflation slows without a sharper growth break, the story moves from data pressure toward policy decision. For pressure mounts economic, that follow-through is the test. The trigger split is the next PCE print is central and Fed language will shape pricing. If that trigger does not arrive, the story may stay in data pressure longer than early attention suggests. If it does arrive, policy decision becomes easier to evaluate with facts instead of assumptions.